In this tutorial, I'll be going through with you Tyson stock. Just click in Google, type in Google and click enter, and then you will get this information. You can see the name of the stock, Tyson Food Inc., and the symbol is TSN, which is the Nasdaq symbol. And for one stock, it is 83.83 US dollars for one stock, and the market cap is in billions, which means it's a big size firm, and it pays a dividend of 1.79%. Any firm that is paying dividend, that means they're financially very strong, because after paying their creditors, loans, liabilities, they still have extra money. That extra money they pay to shareholders as dividends. So even if the percentage is small, still it's a very positive sign because they are financially strong. Let's go to Wikipedia and see when was this founded. You can see here founded in 1935, 84 years ago. I want to see what the employees think about this firm. Let's copy this exactly from Google and I'll paste it here. Type Indeed reviews. Okay, enter and then click this one, and you can see we have 6,000 reviews and it's 3.7 star. And read through the pros and cons yourself, what people have to say about it who work here, and check out the photos as well. And let's go to Glassdoor and see the reviews of this firm as well. Now I can see that we have 1,000 reviews for this firm and it's 3.4 star. Read through the pros and cons yourself and check out the jobs listed, the salaries they're giving, the interview questions, the benefits people are getting, and the photos. Let's look at Justia patents and see if it has any patents or not. I'll just paste it exactly on the search bar, and I can see that in 1998 they have patent. So I'm only looking at assignee or applicant because these are people who have full rights of the patent. So that's important. So I can see in 1998 it has patent, in 2000 it has patent, 1998, 2019, which is a recent patent, which is brilliant. So the more patents a firm has, the more stronger it is because it has competitive edge and it's harder to beat that firm, which is brilliant. So it has a lot of patents. That's a very positive news. Look out for recent patents in 2015, 16, 17, 18, 19, because that means they're still innovating. So that's very important. And check out another pages. It's a big list, so go through it yourself. It has recent patents in 2017 as well. 15, yes, that's brilliant. So that's brilliant. That means they're still innovating. Let's go to Yahoo Finance, and I want to see who the key executives are and what salaries they are getting. So that's very important. So let's have a look. Let's paste it here. Now click on TSN and profile. I can see that the sector industry employees, and I can see they have 5 key executives. 3 of their salaries have been shown. 2 of the key executives say it's not applicable. You need to find out why it's not applicable. That's important. 3 salaries have been shown. So the more information we have about the salaries, the more transparency there is. So please find out why it's not applicable. Now let's go to macro trend, and I want to see the ratios. Click price ratio, price book ratio, and paste in the symbol. And I'll explain you briefly about this. Price book ratio means that if it's less than 1, that means stock is cheap. At discount, it's very cheap, so it's ideal time to buy. If it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it gets. So please be patient with this website because it takes time to load, because it has a lot of data, so don't worry. But once it loads, it will make your life quite easy, so please be patient with it. Now it's just loading. Let's have a look. Right now it's 2.26, which means somebody who buys right now, they'll be paying 2.26 times more money. It's 2.26 times more expensive. In 2016 September, it's 2.68, which means that somebody who buys that time, somebody who bought in 2016 September, they paid $71 to buy something that was $26 worth. So it was 2.68 times expensive. Somebody who bought in 2008 December, they got a discount of 40%. They paid $7.74 to buy something that was $12.68 worth. They got 40% discount in 2008 December. Right now it's 2.26 times more expensive. Let's have a look at other ratios. I want to see current ratio. If current ratio is less than 1, that means stock is risky because liabilities are more than assets. If current ratio is 1.5 or more than that, that means stock is very safe. It has good margin of safety. Let's have a look. It's just loading. Okay. So right now I'm looking for 1.5 or more than that. It is a little bit less than 1.5, so it's not very safe stock. Let's look at the previous trend. It is very risky in 2018 December because it's less than 1, which means if you just see vertically up, liabilities are more than assets, which is not a good news. Let's look at the previous one. Has it ever been 1.5 or more than that? Yes, it has. So I'll see that I can see that since I can see that since 2006 March um up till 2018 March, it has been always been 1.5 or more than that, which means it has always been a safe stock. But since 2018 June up till now, it is a risky stock because it has always been below 1.5. So recently it has been a risky stock. So you need to be careful about that. Let's go to debt equity ratio. In this ratio, I'll know if the company is mainly operating on debt or equity. I'm looking for zero point 0.5 or less than that for it to be brilliant. Let's have a look. Okay, right now I can see that it's more than zero point 0.5, so it's a risky stock. I'm looking for zero point 0.5 or less than that. It's a risky stock. Let's look at the previous trend. Has it ever been zero point 0.5 or less than that? Yes, it has, but there are fluctuations as well, so there's no consistency. But if I see since 2005 up till now, for main like majority of times, except in 2014, 13, and 12 and 11. So in 2010, 11, 12, 13, 14, it's less than zero point 0.5. So it's a safe stock in those years, but majority of time I would say before that even and after 2014 it's a very risky stock because it has always been above zero point 0.5. So I would say it's a risky stock. Let's go to return on equity. I'm looking for 8% or more than that for it to be brilliant, but let's have a look once it loads. Right now I'm looking for 8% more than it is more than 8%. That's brilliant. Let's look at the previous trends as well. Has it ever been lower than 8%? Yes, it has been lower than 8% in 2010, and it has been a minus equity in 2009, and before that as well, it has been a lower. So since I would say 2005 up till 2010 June, it's lower than 8% equity, which is what I'm not looking at. But after 2010 September, since recent as up till now, so since recent 9 or since recent 10 years, or 9 years, it has always been consistently above 8%, which is brilliant. That what I'm looking for.